Hi, I'm Don Simmons, and in today's Market Minute, I want to talk about consumer confidence. Is it signaling a storm ahead? You see, consumer sentiment is falling, and fears about losing jobs are rampant. People think business conditions are worsening, household income expectations are declining, and inflation expectations are rising. What does all this mean? Although I tend to be an optimist by nature, I'm also a realist who analyzes data to make sound investment decisions. The above listed data points often act as a leading indicator of economic shifts. When confidence deteriorates across income levels and job security and inflation expectations, it raises red flags about the future health of the economy. In short, it appears that the warning lights of the dashboard are flashing. If consumer sentiment continues its downward trajectory, it could mark the beginning of a broader economic slowdown. Consumer confidence is weaker than during the 2008 financial crisis. The April survey of consumer sentiment from the University of Michigan shows the following. And let's take a look at some charts. First, let's look at consumer sentiment. Consumer sentiment has declined sharply across both high income above $100,000 and lower income households, reaching levels not seen since the Great Recession of 2008. When confidence drops across all income groups, it signals broad-based economic anxiety that can lead to reduced spending, lower investment, and slower economic growth. Second, let's look at job anxiety. There's been a sharp increase in the percentage of consumers who expect higher unemployment over the next 12 months. Levels not seen since major recessions in 1980, 1991, 2008, and 2020. Such heightened concerns about job loss can lead consumers to reduce spending, which in turn may slow economic growth and potentially trigger a recession. Third, let's look at how people think business conditions are for the future. This chart shows that a record high percentage of consumers expect business conditions to worsen over the next year, surpassing pessimism seen during previous recessions. When public confidence in the business environment collapses to this degree, it can lead to reduced consumer spending and corporate investment, increasing the risk of an economic slowdown. Next, here's a picture of household income expectations. As you can see, this chart shows a sharp drop in households' expectations for income growth over the next year, reaching some of the lowest levels seen since 2008. When people expect lower earnings, they often reduce spending and delay major purchases, which can weaken overall economic activity and stall a recovery or the momentum that we're having. And finally, let's take a look at inflation expectations. There's been a dramatic surge in both short-term, 12-month, and long-term, 5 to 10-year inflation expectations, reaching the highest levels in over 3 decades. When consumers expect sustained inflation, it can lead to reduced purchasing power. It can lead to distorted financial planning and pressure on central banks to tighten monetary policy, potentially slowing economic growth. It's important to note that not all indicators are flashing red. Recent data from the Consumer Conference Board shows that the leading economic index, while still mixed, has stabilized in some areas, such as durable goods orders and manufacturing of new orders. The labor market remains resilient overall, with unemployment still near historic lows, and job openings remain elevated in several sectors. Additionally, consumer spending, particularly in services, continues to show strength, and corporate earnings in certain industries have surpassed expectations. These green shoots suggest that while risks are rising, the economy is not without momentum. So we'll be watching consumer confidence, and whether it leads to a self-fulfilling prophecy in slowing down what seems to be a good economy. As always, a balanced approach, considering both cautionary signals and positive developments, is essential in making prudent investment decisions in an uncertain environment. As always, thank you for the trust and confidence that you've placed in me and my team. I'm very pleased with how our portfolios are performing so far in 2025, and I believe that we are well positioned for what lies ahead. If you like these kinds of Market Minute updates, click subscribe and feel free to forward it on to a friend.